how much can I borrow on my mortgage? That's the number one question everybody asks. Want to know what the answer is? Of course you do. Let's go. Hey everyone, my name is Adam, I'm an expert mortgage broker, and today I am talking affordability, how much we can borrow on the mortgage. Now, the answer to this can be quite complicated, so listen up because I've got all the information you're going to need. Now, if you like what I'm talking about today, give us a thumbs up, subscribe to the channel, there's a new video coming every week which I know you're all going to enjoy. Now, the biggest thing we need to think about when we look at how much you can borrow is your income. How much you earn and how it's made up. Generally speaking, the more you earn, the more you can borrow. Some lenders even have stages, so let's say if you earn over £50,000, they might get a little bit more generous. Not all lenders, but some lenders will do that. Then we start to think about how your income is made up. Now, if you've got a basic salary, let's say you just get paid the same amount each and every month, lenders are usually going to use all of that income and they're going to times that income by 4.5 or slightly more in some cases, but they're going to use all of that income. So that's pretty easy, that's fairly straightforward. If you have some income that is variable though, each month or each quarter or annually even, I'm talking overtime, bonus, commission, that sort of thing. If you have income like that, the lenders will usually take an average. So we might average the last 3 months or the last 3 quarters if it's a quarterly bonus, or maybe it's the last year or the last couple of years bonus if you get paid an annual bonus. So if you get variable income like that, lenders are going to take an average and then they're going to use that in their calculations, but they might not use all of that. There are some lenders that will. So if that's regular and we can demonstrate that it's regular, then there are some lenders that will use all of that income. But then there are some lenders also that will use, say, 50% of that extra variable income. So what we can get from each lender can range dramatically from lender A to lender B. Now, when we're on the subject of income, if you are self-employed, it can be slightly different. Now, a lot of lenders will just use the same criteria and the same income multiples if you're self-employed, but there's 1 or 2 that might be slightly less generous. So we just need to be careful about which lenders we go to. If you're self-employed, we're going to be using net profit or salary and dividends and things. We'll talk about that more in another video. So let's focus now on being employed. So the more we earn, the better, the more we're going to be able to borrow. So a lot of people though have some deductions from their income. So we might have deductions in the form of student loan, pension. Some people get things like healthcare or cars or parking, travel, all of that sort of stuff. Lenders will take those deductions away. Not all lenders will take all of those deductions. So again, we need to choose our lender carefully. But a lot of the time, we're going to look at those deductions and we're going to take that away from your income, just like any other commitment. So that may well reduce the amount that we can borrow. That takes us neatly onto commitments, doesn't it? So commitments are things like loans and credit cards, student loan, personal loan, secured loan, other mortgages, credit cards, car finance, all of that sort of stuff. Your monthly payment on that, or your balance if it's a credit card, is going to affect how much you can borrow. The more other debt you have, the less you can borrow. Now, some lenders are quite generous anyway, and you might find that if you earn well, having a few little commitments and things won't actually make any difference to what you can borrow. But if you're trying to borrow the absolute maximum, if you've got £500 a month car payment going out, that's probably going to have quite a big impact on how much you can borrow. So if we try and keep those other expenses to a minimum, then that will maximise your affordability. With some lenders as well, it depends what kind of mortgage product we're going for. So if we're going to fix for 2 years or 5 years, some lenders are a little bit more generous if we fix for 5 years. If you're going to fix for longer, say 5 years, you're going to be a little bit more protected from short-term fluctuations in interest rates. So the lenders can be a little bit more comfortable just lending you that little bit more. So 2 years and 5 years can sometimes have an effect. Your credit score can also affect how much you can borrow. So I've done other videos on your credit score and how to build up your credit score, but If we're having to go to a more specialist lender because you've got credit problems or problems with your payments in the past, then they are generally not as generous as your main kind of high street lenders. So a lot of the time, if you've got credit problems from the past, that's going to affect your borrowing and mean that you can't borrow quite as much, or that you have to put down a bigger deposit. Now let's talk about deposits for a moment. In some cases, the more deposit you have, the more you can borrow. So there are some lenders that say, well, if you've got 5 or 10% deposit, we're not going to lend you quite as much as if you've got 25% deposit. Now the reason there is that the rate is higher. So if you've got a smaller deposit, your rate is going to be a little bit higher than if you've got a bigger deposit. So your monthly payments are going to be more. So they're going to use up more of your disposable income. So for that reason, the lenders aren't going to be quite as generous. Now not all lenders have that, but a lot do. So that's quite a big factor as well. And it can affect which lender is best to go to. Another factor can be your age or the term of the mortgage. So the longer the term, generally speaking, the more we can borrow. Now, if you are progressing in life and we can't take a long-term mortgage, then that's going to limit our affordability. Again, it's all about how much of our disposable income these monthly payments are going to use up. So the more of our disposable income that is used on a mortgage, the less money we've got for all the other bills and things that we've got to pay. So the shorter the term, the less generous the lenders are going to be. Now, all of this goes into what we call your affordability. And the key factor nowadays is that it's not just X amount times your income. We can use a rule of thumb. So if we take a rule of thumb of about 4.5 times your income, that's going to be pretty much where you are. But as we've talked about, if you've got complications in your income, if you've got variable income or big deductions and things, that's not quite going to work out at 4.5 times your income. Nowadays, it's all about affordability. So the lender looks at what comes in each month, they look at what's going out each month. Usually they will look at what we call the Office of National Statistics to work out what kind of monthly payments on average people have for gas, electric, shopping and that sort of thing. Interestingly, this year, it's kind of mid-2022, the cost of living has gone up and is going up quite a lot. So a lot of lenders are just reining in their affordability a little bit. They're getting less generous. So they're going to work out what you've got left over after you've lived and after you've paid all your other commitments. And that bit that you've got left from your income is what's left to pay your mortgage payment. So that's what they're going to base their calculations on. And the more disposable income we've got each month, the more we can borrow. So you can see from all of that, it really does depend on your situation, your income, your outgoings. There's not one rule that fits all. So it's really, really important to get some professional advice and use someone that knows which are the best lenders to go to. We have access to all the different lenders' calculations and things. Obviously you don't have to use us, but we are here. If you would like to explore your affordability and know what you can borrow, please get in touch. There's a link in the description below. You can book an appointment straight with us, or you can go and check us out on our website first. I hope that's been of some use to you. Working out affordability can be quite complex, but don't let it put you off. Have a look at our website, and I will see you on the next video next week. Take care.